The markets traded indecisively today. Even though they backed off a little bit, they didn't do anything that showed any decisive selling. The Dow, as you can see, is right back into the sideways range, which might be kind of part of that fry pan bottom pattern, with this being the dimple, kind of indicating that we could be moving sideways for this time magnitude. But what this does for us is, as long as the markets aren't selling off, it allows each individual stock chart that has a good, strong candlestick pattern to it to continue to perform well. For example, one of our option recommendations was on LIT. Notice it hasn't been able to close below the T-line ever since the gap up. We're going to just stay long until you see a sell signal and a close back below the T-line. So these type of charts will continue to move in the same direction with much more confidence, as long as the overall market hasn't had a severe change of investor sentiment. That same type of analysis can be applied to the major stocks like Amazon. You can see how Amazon has stayed above the T-line basically in this whole uptrend ever since coming out of this little J-hook type pattern. So it makes our analysis and our holding a position very simple. We just stay long until we see a sell signal and a close below the T-line. And candlestick analysis works for any trading entity that you're trading, whether it's stocks, currencies, futures, commodities. For example, our short position on soybeans was based upon a very simple analysis. The stochastics were heading down. They had an evening star failure right here at the 50. Have not been able to get back up above the T-line. And we shorted when it went into the next price pattern, which was a bearish J-hook pattern, and we'll stay in short. Now we know what to be watching for, in the sense that we're starting to move away from the T-line. We're in the oversold area. Any extravagant selling at this point, we'll go ahead and cover our short positions. The graphics of candlestick analysis just clearly indicate what's going on in investor sentiment, and with some very simple rules, we know that the further away you move from the T-line, the higher the probability it's time to take profits. That same rationale was used when we were buying July live cattle at this level, and we were holding long, and we started noticing, or at least starting assessing the fact that we were starting to move away from the T-line. Made it very simple. When it gapped up the next day that far away from the T-line, we just immediately flipped to our 10-minute chart and started taking profits up here. Even though there hadn't been a sell signal, the rationale was, when you're that far away from the T-line, the probabilities become very strong they're going to bring it back to the T-line. Candlestick analysis is nothing more than the graphic analysis of what happens in human nature, and basically puts you in the right positions and get you out of the positions at the appropriate time. That'll be it. We'll see you in the chat rooms.